Welcome to the show, Patrick. All right, there you go. Welcome to my first deal. And so, yeah, since the last time we have chatted, we had really amazing response. Our friends are telling us how good we look on camera, how much they love the knowledge, right? Especially you know, handsome guys. So lucky for you, Clarissa. So I invited you guys back for a special reason, because today we're going to be outlining the blueprints to achieving that $20 million real estate asset empire. Because last time we talked about your first deal, right? But today we're gonna go one step deeper so that our audience, whoever they are, they will know exactly what a blueprint is. So why don't you start?
Sure. Today we're going to talk about how to build a $20 million empire, real estate empire. And okay, well, here's the thing. I could talk about how I did it, right? And the condition at that time.
Sure.
Right?
Well, so why don't we talk about what we have right now? Let's say you have 20 million in assets. What are you doing to manage it? Where is it? What kind of condition it is today? And then we can talk about how we started.
Sure.
How we started one by one.
Okay. Well, today I own a couple of multifamily, commercial mix multifamily. Right. So they're all mostly in Windsor, Ontario.
Okay.
And the reason I purchased there, as I mentioned last time, is because we recognized the property there was undervalued.
Okay.
And that's where we recognize the market has an opportunity for us to pick up assets, pennies on the.
Is it asset value?
Yeah, 20 million. It's an asset value.
Asset value.
Yeah, that's
awesome.
Right. And there's liabilities. There's equities.
Yeah. So what are you doing to actively managing it?
Well, we have our property management in place, and we have our own staff, our own team to do constant repairs on it.
So what's your structure for that? Like, do you get on a phone call every single day? Like, what's your normal work day like?
It doesn't actually. The good thing about real estate is it doesn't require too much activities until you're doing renovation projects. So you just sometimes have to manage you have your own project management people to those renovations. You just manage them, and that's it.
So somewhat passive, right?
Real estate is not completely passive, right? But it is partly like an investment, right? So if you look at it, what happened is that real estate, you have the land aspect. That's the asset. You have the building aspect. That's more like a functioning business on top, right? You have tenants, but the amount work and time commitment usually doesn't take that much unless you're doing a lot of renovation.
Right.
So in terms of building a real estate empire, real estate investment empire, ideally what we're looking at is more toward the asset appreciation side rather than the development, the renovation aspect of the real estate.
Interesting. So I did some research. I never, even though we have a real estate background, I never really niched it down that much.
Right.
Within real estate, there's like 20, 30 different niches, like commercial real estate. Within commercial real estate, you have like niches like retail, land assembly, multifamily, that's commercial. So there's multiple niches right now. Now, just tell me more. Like, can we go specific, zone in on just like one property, let's say one unit, and tell me how you actively manage it? Okay,
I could tell you how I got to purchasing that property, why I do it, right? Because actually, in terms of the real estate investment business, management is only a small aspect of it.
How about
where majority of money is made and how you can build your wealth, build your equity, is actually making the right decision, picking the right asset class to buy, and having the market appreciation. That is the main part of the business. Management are usually outsourced. We have a management team that collects the rent, and they're doing the day-to-day stuff.
Okay, so let's leave the operations aside. I think we should put more emphasis on how you found the deal.
Yes, exactly. It's like buying a stock, right? It's buying the stock that goes up.
Sure. Let's do it this way, just for our audience. Let's pick your most profitable, the best deal that you currently own. Why don't you go over how you found it? What was the condition then? What was your logic behind making this decision? How do you held on to it? Is there any difficulties that came up? Why don't we just talk about that?
Sure. Okay. Well, one of the deals that we purchased is in Windsor, Ontario. It's a 17-unit apartment building at it's a 670 Cameron Road in Windsor. It's really close to the downtown area of Windsor, and we picked that project up for $800,000, and today, it's worth north of $2.5 million. Yeah, so the amount of capital we put in for that deal initially for the down payment is only $150,000.
Wow,
so if you
amazing.
look at the return,
10x return.
It's higher, yeah.
So we talk about 10x return.
So that's where
that's a good deal.
Real estate is actually especially multifamily.
Yeah.
It's a good asset class to do.
Okay.
And we have done numerous deals where sometimes where the owner would finance your down payment as well. So your amount of down payment is actually it's not as high as it is, and it depends on the market conditions.
So you're saying that you put down $150,000
Yeah.
and the owner finance a portion of it,
Yeah.
and the bank
could
finance
structure
another
it, yeah.
portion of it.
Yeah.
Interesting. So
Yeah.
tell me exactly how you came across this deal, how you structured it,
Yeah.
and any challenges.
Well, I was already a known player in that scene. At that time, we were the biggest multifamily buyer in a small town called Windsor, Ontario.
Okay. What's the population?
Population is about, including the outer rims
outer.
and stuff, about 500,000 people.
That's not
And they're
bad.
the 10th largest city in Canada.
Oh, that's actually pretty
Yeah, so they're like,
bigger
but
than-
if you look at smaller cities like in Canada, it could go really
Like,
small. Usually about 100-something thousand.
Yeah.
Those ones, based on my experience, I tend to avoid right now.
Why?
Because of the potential for appreciation is very, very low. Compared to where a city, it's enough to support. They have an airport. They have, they're more known, and then they have Walmart coming in, and all those. You could see the tremendous growth compounding it. And right now, if you look at Windsor, Ontario, they have a $5 billion project doing
the battery.
largest battery plant in North America. It's being
Wow.
built there.
Amazing.
So if your city size is not enough, not sufficient, you will not have the ability to attract those large projects.
Can I ask you, just for the audience, would you have, let's say, a checklist that if you go through the whole checklist, if you get 80% on it, passing grade, you would just pick this as the market?
Yeah.
Is that something that you have?
Yeah, and normally it's not a fixed checklist.
Yeah.
It's just overall a view. Ideally, what I'm looking for, right? So that's a good
You're looking
question.
for growth, I guess.
Yeah, ideally,
That's the biggest thing.
What I'm looking for is growth, cash flow, right? So at the time, and I'm also looking for what you call margin of safety. So
Yeah.
what that means is that if I could buy this piece of real estate where it's worth, let's say, across Canada, right, to buy a 1-bedroom, it's worth $100,000. But if you could pay $30,000 for that 1-bedroom unit, then you know, hey, you got a deal, which is below its construction cost.
That's like 70% off, to be honest. If you can find anything, let me know.
So that's where, right?
Yeah.
So when people see it's a good deal, right? When
You know it's a good deal.
you could know
You
it's
know
a good deal, and it's come screaming at you, right? But that's only when you have studied enough, you've seen enough deals, you're being a market participant, and the most important thing is not to be fearful, right? When everybody's fearful and when everybody's listening to the news, they're skeptical, they're confused about what's happening in the overall market. You have to be the one that is brave enough to take action after you have done your homework.
Yeah, you know what's funny? In my real estate career, I have encountered hundreds of investors, very smart and very not so smart investors. I know people that got stuck with their capital in the land and the prices fall off 20%.
Yeah.
2017, 2018,
Yeah.
couldn't recover. I knew people that went in the market 2018, 19 when the market was down, and they just
They
bought
made killing.
massively. They made a killing and
Yes,
sold
yes.
in 2021,
Yeah.
22. So what differentiates a smart investor versus a normal investor?
Well, generally, I like Warren Buffett's quote, right? When
Right.
other people are fearful, you should be the one that is.
Right.
You know?
When other people are bold, you should be fearful. Okay, so we talk about the investor, what differentiates it. We talk about Warren Buffett, and let's go back to your commercial deal that you said it was very profitable. You made 10x your initial investment, grew from $150,000 your down pay, all the way up to, let's say, $2.4 million, and your profit is like $1.5 million. Okay, let's talk about that deal. What was your decision-making process to acquire that deal? Who helped you along the way?
Right. So along the way, what happened was I already gained a bit of track record, right, as buying single-family houses, condos, and they end up to be, to be winners, and that's how I got my initial capital, but most importantly, my confidence.
Right.
Right. Once I have the confidence, I understand a little bit more about the market. I understand a little bit more about real estate investing. Then I start doing multifamily deals, and that's where the huge upside it's been experienced really through the understanding of the asset class and being comfortable with it, right?
Okay.
So at that time where I buy those properties, I have no expectation to see it grow to such a huge amount. They actually exceeded
your expectations.
And a lot of people were surprised that Windsor, the city itself, became the top city for growth for multiple years. That's because, as we know, right, what happened was with the Canadian government is they put a lot of immigrants, they put a lot of refugees into Windsor, Ontario to fill up those vacancy places and support the city, right? So as we understand more about the overall aspect of the economy and how things work, you become a better investor in that sense.
I guess it's your foresight, because you know that from the country perspective, it's opening up to immigration. It always has in the past 20 years. And then there were wars that were happening, so they sent refugees over here, and they moved the refugees, obviously, not to the warmer city.
Well, they moved the refugees in Canada, not to Vancouver and expensive real estates, right? Because they're already
let's find you the coldest and the darkest place in the city, and you move there.
Well, they move people to where's the most affordable cities.
Right.
So if you look at the whole dynamic and the whole structure in Canada, is that the government likes supporting what they call the underdog, the one is that needs the most help, right? And why does Windsor got into that state? Because of Detroit, right? Windsor does a lot of car parts for Detroit, right? And all those smaller car parts are outsourced to Windsor, Ontario. And Windsor, Ontario is the manufacturing capital of the whole Canada. So what happened is, as Detroit come down in value and they crash, right? You see on the news all those negative stuff. Where we chose Windsor is because of the government, as Canadian government, they would come and try and support the city and try and revitalize the city, and that's exactly what they have.
So let me ask you, obviously there's risk involved, right? For example, with Detroit, the city came back. At one point they were selling real estate for something ridiculous, for like $1.
$1.
Just so people can go in and pay taxes. Everybody's fearful. So your bet was that Canadian government will go in, support Windsor, and your bet paid off.
It wasn't necessarily too much of a bet, because at that time, somehow inside of me, I know analytically, if you're buying things that is below the cost of production, right? So like I mentioned that example, right? A condo may worth $100,000. If you could pay $30,000 for it, and you look at the across in Canada, right? Even where the government support welfares at let's say $900 a month, right? You know it's sustainable because the government's there to support it. So that's why the city would not go into it's just understanding the whole aspect of the picture and understanding what risk. A lot of people could not define it properly, but risk has to do with value, right? So you have to understand what the value is of that asset. Intrinsic values are.
So in this case, let's go back. So first of all, you picked the right market.
Yeah.
And from the right market, you picked the right asset class.
Yeah.
And from the right asset class, you picked the right deal.
Yeah,
okay?
and then
So-
eventually lastly the right management team.
the right team.
Yes.
So you just play the four. So let's structure it like 4 pillars. Patrick's 4 pillars, okay?
Okay,
Of
okay.
real estate investment for building a $20 million empire.
Okay.
Copyright that. So the 4 pillars, let's go in one by one, attack it one by
Sure.
one, okay? So how you came across making decisions. So first of all, out of top 10 cities
Yeah.
in Canada,
Yes.
how do you pick Windsor?
Well, I was looking for the most undervalued
Mm-hmm.
with so that means cash flow,
Right?
right? Just and
Hold on one sec. When you say undervalued, I think you were mentioning that the market price is below the cost that it would take to produce.
yeah,
That's what you mean by undervalued, right?
yes, and also by the typical average housing price, right?
Yeah.
If I look at that time, an average house in Canada might worth $350,000,
Right.
right? And if you could pick one up at that time for 80,000 or 100,000,
It's pretty
and
good.
you're buying in a city that's of a decent size, right? You're not looking in a city that's in like 10,000 people. You're looking at a very decent
Right.
top 10 city. So that all aspect of it came to its valuation, and it's completely, completely weighted by the asset manager, like by the investor himself. You have to be able to compare certain things and come to your own conclusion.
The audience might experience all of a sudden a very
brightness?
bright light.
Well, that shows
turned
that
on.
perhaps
It's a
taking this-
preparation work. It's
Yeah.
but that's my fault. I didn't prepare
No.
better enough.
Don't worry about that. I
It's the
think
second podcast. I'm trying to get used to the whole process right here.
I think what happened is
Yeah.
that at least hopefully they get some of the ideas and they could brighten their own
Yeah, like
Yeah,
wake
bright-
up a
brighten
bit
your
more.
their own future, right? With
Brighten
the
your
right,
own life.
right decision.
Yeah, okay, so now you can brighten your own future. So we go back to Patrick's 4 pillars of $20 million empire, okay?
Mhm.
So number 1, we have the overall market picking, and we talked about the top 10 cities,
Yeah.
how you decide on Windsor. Were there any other cities that you were looking into? Let's say, do you
Yes.
find the top 3 that was also
No,
undervalued?
that is so far from what I recall.
Yeah.
After all the research, that points to that's the city itself.
So
Yeah.
so all the research pointed you to
Yeah.
Windsor, the city.
Yeah.
Okay, good. So that's the first pillar. And then the second pillar you have, so it was the market. Second is finding the deal, was it? And then the third one was operations.
Yeah.
People.
The
Anyway.
way I invest is
Yeah.
I focus on the city first. The
Okay.
city, the way I feel that it's its own
The
macro organism.
Okay,
right?
so you found the city,
yeah,
you identified the market,
yeah,
and then you were trying to niche down. Okay?
yeah, asset class. Yeah.
Asset class. So you were trying to figure out, would it be commercial, retail,
Or
land assembly,
Yeah.
pure land for development
Yeah.
purposes, multifamily, single family, 2-bedroom, townhouses. There's so many
Sure.
products. Let's talk about asset class. What are you doing to decide on which asset class you
So that's actually
Yeah.
a good question, because at that time, if I bought the wrong
Mm-hmm.
asset class, I would not have experienced the amount of gain that I have. What in terms of that, what is the wrong asset class? When a city is going downhill
Mm-hmm.
and it's on the recovery, you do not want to pick up asset that's like development project and stuff like that, because that's a long way to actually giving you that return you need as an investor.
So
at
expand
that
on
time,
Yeah.
well, because if we have picked up let's say if you bought a development site, it's going to sit there for years, right?
Yes.
Why? Because the property there is selling under the price of development costs.
And you're not
Right,
going to
so-
have a developer
Yeah,
develop.
so you would not put money in to build a 20-story building at that case, where nobody will buy from you because they will be buying a resale market that's hugely underpriced. So developer market is not there. So you cross that out. But what you focus on at that time is also you try to avoid commercial building at that time.
Oh, so
Why
avoid
commercial building?
Why?
Because at that time when the economy is bad, when they're undergoing recovery, the hardest hit still and the least supported asset class still are the retail shops, the commercial office, and those got vacancy. Now, why we pick multifamily residential? Very clearly was that because we're in a socialist society, the governments always writes checks to people that is going
So-
to social housing. right?
Indirectly, your customer became the government.
Yeah, exactly, right? So there's people living on it, but the government pays you. And that's why you could pick up, so that's why you come to evaluating risk. A lot of people think, oh, it could market go up and down. No, but you have to think more deeply into, hey, what's the source of revenue we're going to get in? How we're going to support our debts and all that, right? So as you drill down into it, right, there was not a bet, it was an investment because our income source was covered.
I see.
Right.
You see me?
Your
That's
income
the
source
difference
covered.
between the mentality of an investor and a speculator.
Yeah.
I do both, right? But mostly when I make the biggest decisions, the biggest moves are more as an investor.
So, as an investor, your risk are covered. Then you need to be in a market where you can cover the risk. which
So
is
I'll
cash
tell
flow.
you how the risks work at that time, right? At that time, we have buildings that's selling at 10% cap rate.
Okay.
Our cost of money is
Right.
about 4%. So as soon as you acquire the building, you're up 6%
Right.
just on the cash flows, and also you have a lot of room to for the cost itself, right? For it to appreciate back to what the
Right.
norm of the whole Canadian city is. So from $30,000 could have gone to $80,000 in terms of its valuation.
Interesting. Okay, so let's go back to finding the multifamily site.
asset class.
Asset class, okay. So at that time you have land assembly, let's say development site, you have commercial, retail,
Yeah.
you have duplex, townhouse,
Yeah,
multiple
and we
things.
skip all the single family house
Yes.
at that moment just because we noticed multi-family of fewer inventory, and it just allowed us to, instead of buying 100 houses,
Yeah.
we just buy
just
one
buy
or
one.
two buildings, and that's enough to for us to kind of capture this income.
Okay, so in this case, we mentioned that commercial as an asset class in the economy recovery, it doesn't do as well as multifamily because multifamily is supported by the government. So therefore, you have a iron bull, we call it.
Yeah.
So somebody giving you money regardless of
Yeah,
what you
the
do, right?
government's your best client.
Best,
actually. Yeah.
best client,
Yeah.
absolutely. Okay, so let's move on to asset classes. Now, the next thing we talk about is how do you find this deal?
Right. Okay. Yeah.
Out of, let's say, there's 20 multifamily deals on the market, how do you pick this one versus the other ones?
Oh, it's funny because what we did come to the market is when the market came down, there's tons of deals in the market. Nobody's buying, so there's no multiple offer. We're the only players in town,
And you were just-
and we were feel as the crazy ones. When we're the crazy one at the market, where hey, those guys came
Yeah.
from BC. I don't know what the hell they're doing, but they're buying those buildings that
Yeah.
nobody wants, right? And they're willing to give you the keys. So at that time, we're actually the ones that's actually buying every building on the market. So of course, we want to pick. Ideally, we acquire the ones that have the least amount of renovation work, right? So we're not in the renovating business. We're in the investment business. We want to take over the asset and just make a little few changes, improve it a little bit, and have the income stream come in.
And jack up the rent.
At the time when we're acquiring, we don't have the luxury to jack up the rent, but after a year or two, as the market turns around, our thesis play out,
Yeah.
then we have the option to
To
increase
jack
rent.
increase the rent. Perfect. So back then, let's say there's 20 properties on the market. You go to every single property,
Yeah.
you get a realtor, and you put an offer in, right?
Yeah.
Is that your strategy?
Yeah, and
Because no
and
one's competing with
the,
you.
The good thing about working in a small town,
Yeah.
there's only a couple of, like, honestly, there's only like 3 to 4 commercial realtors, that's
Right.
big
Very
commercial
active.
realtors that holds on to all the deals.
Ah.
So all the time we spend the whole time, every time we come in, we buy a couple of deals from them. We spend the whole time networking with just a few commercial realtors,
Yeah.
and they've been in the industry for like for years, right? About 10, 20 years. So those are the guys that host all the part. They know everybody, right?
Yeah.
So we pay, and they open up their connections. With the
Yeah.
property owners.
And also, when you're buying property, they'll just say like, "Oh, that property, I know the owner.
Right.
Let's go talk to them." So we pick up property that's not even in the market, and that they weren't going to sell, but they were just like, "Oh, there's a buyer potentially." So
Yeah.
they'll just
Pocket listings.
Pocket
listing.
listing.
Pocket
Pocket
listing.
listing. To define a pocket listing, it just means it's not public, it's not on the market, not on MLS.
Yeah.
Yes.
And of course you know that too, right?
Absolutely.
Relationship, real estate is a relationship game, and
Yeah.
we have to show that we're credible buyers. We close on deals, so realtors themselves would
They will trust you.
They trust me to open up their pocket listings,
Exactly.
and that's how we find the best of deals. And we are known to making action in that market.
Absolutely. That's
So
truly
so
amazing.
it was a great time. We
Right.
become the only player in town.
Yeah,
right?
so-
and it's the town.
So you find the right market, you know what the value is, you went in, you dominated it, and now you have properties that 10x in value. Okay, now, final part, operations. How are you managing
And that's
with
just
your
on
operations?
my side. We
Yeah.
talk about our client side, it's more than that.
Okay, so these, what do you mean on your side?
So what I did was when we were acquiring properties there, I also worked with investors from Hong Kong himself as well, and we acquire more than $50 million worth of asset. I'm more like a consultant on that part.
Oh, I
I
see.
help him build the empire
Right.
himself. And he ended up making way more.
you're an empire builder.
Yeah. So the thing is, the good thing is that the experience itself, when we have alignment, we understand how each other works. We are building. We're building wealth together.
Yeah.
And that's what I like.
That's what you
place.
want to do.
Yeah.
Exactly.
Yeah. Just winning with friends.
It's like what Ray Dalio said, you want to go to the jungle not by yourself, but with a team of people that you like, right?
Yeah.
Exactly.
Yeah.
Yeah. Okay, so operations. You manage 100 units and you're managing other portfolios as well in Windsor, Ontario?
Yeah, so basically what we do is that we pick a property management, we try a couple of big ones
Right.
in the market. I didn't feel it was too good. We wanted more control. So what we did was we picked a local property manager, and then we set up a system with them. And then because of the size of our portfolio,
Yeah.
we're able to dictate how things are run, right? And management itself, it's just keeping the operation going, and renovation here and there. That's pretty much it. But it wasn't, and it should not be a big part of your real estate business, right? The money is made on the acquisition, on the vision, on the equity growth.
Yeah, you know what? I always heard that. You make money when you buy in real estate.
Yeah. Yeah.
Tell me about that. Like, why do people tell you that you should make money when you buy?
Well, because in this case, you're not really guessing, right? I'm
Yeah.
not buying something, let's say I'm not buying a prime real estate already fully developed, look the best, and hoping the market to get higher. You can only get lucky so many times, right? And doing that strategy itself, it's a hit and miss, right? So more sophisticated investor will look for, hey, this property I think is worth this. I like the income of this property. It's in a prime spot. No other competition are looking to bid against it. Maybe I could get a good deal. Let's try it.
Yeah.
Right. So that's a lot of the better investor would go for those
Value properties. Okay, so let's go back to your Patrick Liang's $20 million empire, 4 pillars. We have picking the right market, picking the right deal, and picking the right asset class. Then you have to pick the right operator. Okay,
Yeah.
so that's your 4 pillars. Since we talked about that, now let's talk about what most other investors are doing in big markets. They're speculating. Okay, so tell me about the difference between speculator versus you.
Well, speculating, it's kind of, I'm buying at this thing. I
Yeah.
just want to perhaps even ride a trend higher.
Right.
And I'm not getting any special advantages.
Okay, so if you got a message for the speculators out there, I know you're out there, what would you tell them?
Well, good luck.
So good luck!
Good luck, right? I mean,
Good luck speculating!
it is, it is a way people could make money
Right.
too, right? But it's, I just prefer using this strategy,
Yeah,
right?
yeah.
Buying undervalued assets, by paying way less than it's worth, and having a good sized cities, in a good size economy.
Perfect. Okay, so let's talk about the current status and let's talk about the future. Okay, so currently, what are you investing in? What deals are you looking at?
Currently, I am putting together, I'm consolidating my assets and putting together a fund.
Yeah,
to raise,
when you say consolidating your asset, what do you mean by that?
yeah, so I'm just
Selling, buying?
Yeah, I was just selling some of the assets, but putting a pool of capital together, right? Taking some capital out to put together to buy cash flow real estate.
Okay, so you're buying more cash flow real estate?
Yes, and I'm looking at in the future, what I'm expecting is that I could see more of a distressed property being an opportunity here.
Okay.
And not necessarily in cash-rich cities like Vancouver and Toronto, but I'll be looking toward more of perhaps the second tier.
Second tier as in, what?
Yeah, the more undervalued. Again, right? The same strategy we're
strategy.
looking to do, right? So it's the same thing over again, and I find that investing has to do with a lot of emotion too, right? Like the character, the emotion, the mindset.
Okay, so one thing that came out in Canada that's going to affect the play field. Now they have barred foreign buyers from purchasing here.
Yes.
There's also other changes.
Yeah.
Supply going up. People are selling more. Interest rate up. That's a current status. And there's refugees, immigrants coming to Canada.
Yeah.
So going on from now for the next 5 to 10 years, what do you see?
I see very positive for Canada just because the amount of immigration numbers have been pushing higher.
Yeah.
And we just don't have enough supply, right? So eventually one side have to cave and we don't, like right now, it's also kind of a little bit sad to see we are creating more homelessness, right? You see in major cities. So those have to be dealt with more supplies. And there's no other choice but for Canadian real estate to just go up in this case. Yeah.
So you're saying that because we don't have enough supply, so in the long run, 5 to 10 years, you still are confident in the market that the prices of Canadian real estate will go up.
Yeah, I could see it like instead of maybe one family living in a house, you got like 2 or 3 families
living in a
going
house.
forward, right? So that that's what it takes for people to support.
And it takes time to build real estate.
Yeah.
And to do development, it takes many years.
It
But
does.
the amount of people coming in and the amount of demand that exists here already is creating.
Yeah, so that's actually a good point Clarissa just mentioned, right? So what we're seeing is that a lot of developers are kind of like holding back their projects and delaying, but that also because of this short-term interest rate rise, it would create a squeeze in supply further down the road. So what happened is it's fair market, right? In the short term, because of this huge change, you're lowering the amount of inventory being rolled out 3 years from now. Right, so 3 years from now will be a very good market, and of course, right now you want to position yourself in the right city, right place to take advantage of this opportunity.
Right. Okay. So, can you give a specific secondary market that you'll be looking into personally?
Currently, I'm looking into Alberta.
Okay.
Exactly where I can't disclose, because I have
No, you don't have to give that. You don't have to give that. No. There's only a handful of deals.
We do, right? There's only a handful of deals.
There's only a handful of deals. Okay, great.